Welcome to the Swing Trading with Cycles channel. We're going to do our update on natural gas today. It's March 7th, 2023. We did have a big down day for natural gas yesterday, and obviously an even bigger down day for oil since it's a 2x leveraged ETF. We're starting, it's early trading. The broader market hasn't opened yet. The candle is green so far, and we're going to zoom into lower time frames. We'll focus on that for this video. Just try to understand, because we're at an important juncture here. It's possible, and I posted this on Twitter. Definitely take a look at the pinned comment if you're not following on Twitter. You can do that. There's a link. It's very possible that this day 7, I guess that was Friday, was our daily cycle high, right, on day 7. The same way that this was our daily cycle high on day 5. But it could also be that this is just a little retracement, right? Just like this was a little retracement. I mean, if we zoom in, right now, obviously this retracement came much earlier in the cycle. We had only it was only 4 days old at that point, or 3 days old even. But this was pretty big down move. Most importantly, whenever you make a lower low or a higher high, you want to see price follow through. And in this case, it's not following through to the downside. What you really wanted to see today was a big down red candle like this. And that's actually what we started with. And you can see, you zoom in here, we did make a lower low. But the other thing the thing to keep in mind is the reason why you want to see price follow through is because if it doesn't, it creates the possibility of a false breakdown. And that works on the upside too as a false breakout, which is to say price makes a new high or a new low, doesn't follow through, reverses in the other direction. So you can see we broke down below this low, and we'll look at the weekly chart. So this is day 9 that's starting of the daily cycle. And importantly, we broke below, that was the low for the week, or for the previous week, excuse me. So that created a weekly swing high. Look at that, just a tiny little wick below that. Now, of course, there's a lot to go here in this candle, and at this point, if this were a bullish reversal, we would expect this candle to become a bullish outside candle of this one. So to go basically back above 302 to make a new high on the weekly chart, which would basically just means getting back above this day 7 high. So again, so you always want to look at both, different scenarios. This is a possible move, right? And if that's the case, obviously that means that this daily cycle it's basically getting more and more of a chance that it's going to be right translated, which means it's going to rally for longer than it declines. So today is going to be really important. And again, as I said, we're going to zoom into lower time frames to take a look. Not much else has happened on the bigger picture charts. And of course, we'll look at oil and UNG as well. But let's look at those lower time frames. So nat gas, the hourly is an important one to see. So if you see, we had the gap down yesterday, right? This was our gap down, a gap on the hourly chart at least. And so we had this big red candle, and price actually just kind of consolidated a little bit, like at first, and then it just drooped lower. And then you had this little lower high kind of thing, and then you made a slight lower low, and now we're trying to reverse back up. So these are the lower time frame levels that you want to look at. So this is a hourly chart, and we'll look at the 8-hour as well. But importantly, we're above this little lower high kind of thing here, right? Like, think about that. We had this move down, like, just kind of simplify it. We had like this move down like that, and then we had this little retracement. I mean, really, it went all the way. So this becomes, another way of thinking about that is this is a swing high, and we're now above that swing high. So that is at 2.618. So that's important. We're here at 2.627. And you can see right now, just like really zooming in, this current hourly candle is really just kind of consolidating at the upper end of the range. And so if it doesn't do much, it's going to close in 14 minutes. And so if it doesn't do much for the next 15 minutes, the next candle is going to be an inside candle. And it's going to be a question of which side of that range do we break out of. So we get back above 2.655, and you have a very good chance that we're going to go and at least test like this level, like up here. Because basically getting above this was your first really important sort of area. You're probably going to get resistance around these levels where just price just kind of drooped, consolidated / moved lower. And so that is natural gas. Let's look at the 8-hour chart. How does that look on the 8-hour? Okay. So, and of course, the 8-hour chart is a nice roll up because it's like, 3 8-hour candles makes one daily candle. And that's important. We actually have a swing low on the 8-hour chart. That is a key thing here. So, but we are pulling back, of course. Price would need to stay above 2.619 to remain an 8-hour swing low. And that's important because the only way that you can reverse is with a swing low, and the higher the time frame, the better. So once we have a swing low on the 8-hour chart, it gets us closer and closer to having that swing low on the daily, which is ultimately what price needs to do to reverse. Let's look at Boyle. And I tweeted yesterday that 620 area was the clear stop level. And I'll just zoom in there. Let's look at that together. So Boyle had the huge gap down opening. These are your 5-minute candles. And you can see, and I mentioned on Twitter, we tried to rally for the first 5 minutes. You see these little 2 green candles. And I'll actually take auto off and I'll stretch these so we can kind of see. So you see, we had this little rally here for basically for 10 minutes. And then it started to consolidate, went red, and then we made a lower low below this. So those concepts are all the same. And so this is the candle, or really these 2 candles, kind of a double top that mark the high. But if you're really thinking about it, it depends on how conservative you want to be. That, once you go below that low, that's your danger zone. You can see that's $6.22. That's why I said the 620 area. These are zones, not pinpoint levels per se. That's not, and so you can see once we got below that, you can literally draw the little downtrend, right? So we did that. We had this little really we had this bounce. Then we went down here, went up here, went down there, right? And obviously we had this little high in between, but you can see we just clearly started a downtrend. Most importantly, and that's why the swing high is so important, because the swing high tells you, okay, well, a downtrend is potentially starting, and all price needs to do is get back above this high, really, but first this low here of this candle that marks the high. And you can see it did for one 5-minute candle, couldn't hold it, and then kind of bounced off of it again, telling you, that's not a good sign. Now, the reverse now is also true though. If it can get back above that 622 level, well, that's super bullish. That's a false breakdown. And if anything, this is already, again, as we talked about, it's already trying to stage a false breakdown on that weekly chart. And so this is a great example. So you can see, again, it got, and this is the zoomed out version. You can see it went up, and then you just kind of have this cascade. And if you kind of look at the zoomed out version here, you can kind of see this is just one kind of trend leg lower. And then we make another lower low, a sort of double top kind of situation, and then a marginal lower low, and now we're chopping. And of course, we know that we're set to open at 605, so right around there here, based on what natural gas is doing, and that's going to happen in a little bit. So we'll be watching this closely. Big implications here, and for Boyle, if we just think about big picture here, this is your daily candle. The high of this daily candle is 627. So all it needs to do today is get above 627. So notice that 622 area, that would be your first sort of sign. Okay, looks like things may be going in a positive direction. And then ultimately, you're going to want to cross above. You're going to need to cross above 627. And that makes this a little swing low, right? A higher low within the uptrend. And so this is why, and obviously this move down is like 25%. So this is a pretty wild rider. So you could be setting up for something like that, right? So that's what you want to watch for. That's the bull case. Obviously, the bear case, I mean, needless to say, is that maybe it even does something like this. Because anything below here is a lower high. So it maybe even comes all the way up here. Like that. So that's the sort of bear case essentially. Like we could rally, even this could even turn into a swing low, but it has, I mean, ultimately it has to get back above $8 essentially. That said, nice little trade from here. I mean, we're here at like $6, so getting back to 8 is like 30%, and that could happen in literally just a few days. So I'll continue to keep an eye on this thing. We'll post updates on Twitter as it makes sense. And if we look at UNG, same principle. For UNG, the level is 877. Getting above 877 gives you a swing low on the daily. And again, they all have this same set. It's all the same setup, where you're potentially setting a false breakdown on the weekly chart. You made a lower low. Now you're gonna make a higher. Now you're gonna try to make a higher high. And for UNG, that would be basically getting back to $10 on the weekly chart. Okay, so we'll leave it at that. That's our update for natural gas. We'll keep this one short. Thanks for watching.